It's Money Making Monday, and on today's episode, we talk about RRSPs versus TFSAs. I'm SAMGSK, an investor, entrepreneur, and real estate redeveloper, and this is the Wealth Elevation Show.
GSK.
So a lot of people ask me which is better to invest in, your RRSP or your TFSA. It really depends on your situation, but I'll let you know what both are used for. So the tax-free savings account is a good way to put after-tax dollars into an account and invest in a tax-free environment. You can pull the money out whenever you need, and there's no penalties for that. Now the RRSP, the advantage of that is it actually lowers your tax burden. So if you put $10,000 in your RSP, for example, you're going to get roughly a third back in reduced taxes. So you can actually effectively lower your tax exposure by investing in an RRSP. Now, the big thing is, what do you do with your money once it's in the RRSP? Where are you putting it? How are you going to make compound returns? Right now, a lot of people are using mutual funds, and the thing they need to know is 96% of mutual funds don't beat the market. So only 4% of the mutual funds you're going to invest in are going to beat the S&P 500 index over a 10-year period. Multiple of them close, so you really can't see the stats, but that's the current stats right now. Warren Buffett, one of the world's greatest investors, said when he dies, he actually wants his wife's trust to be 90% in the S&P 500 and 10% in short-term bonds and municipal bonds. So that kind of shows, and he suggested Vanguard because you can get 0.05 basis points as your annual fees, where the average mutual fund is paying about 2 to 3% in annual fees, and then there's others that aren't actually included in that 2 to 3%, so it can be more. So I caution you to always take a careful look at the fees before you invest. Now, I personally invest in ETFs, stocks, but my main vehicle of investment is real estate, because in the tax code in Canada, if you're providing cash flow real estate, which is just homes for other people to live in, you actually get a reduced, you get a lot of tax deductions, so you have a reduced tax exposure. So I personally invest in cash flow properties because the cash flow is almost free after all the tax deductions. Now, it doesn't work like that in every single case. You still can pay, a little bit of taxes on that income, but the point is to create passive income that you work for once, and then it pays you, for the next 20, 30 years. And you also, if you're lucky, you can get capital appreciation in that home, and you can refinance it tax-free, use the money, or you can buy another property with it. So that can also be done in an RRSP if you self-direct it. If you have any more questions about that, just email me, support@gskwealthbuilders.com, and I can let you know how you can invest in real estate through your RRSP. If you have any questions, you can find me on Twitter, Instagram. My handle is SAMGSK, or you can go to the GSKWealthBuilders.com website or Facebook page. And if you like music, R&B, hip-hop, house, I actually have a DJ page on Facebook as well, DJ GSK. So until next Monday, this is Money Making Monday.